you might have had your best day ever, but the guy next to you made like 5x what you made. So instead of feeling great about yourself, which is what you should be feeling, you feel awful. Sometimes on really big beats and bull markets, a stock will go double the options move. Just because you know how to successfully trade, it doesn't mean you know how to successfully long-term invest. As we get closer to that reference price of 680, I want to be thinking to get long. And essentially the psychology is,
hello, and welcome to the Trader's Journey for Investors Underground. In this episode, I have the distinct pleasure of getting to speak with an outstanding trader within the proprietary trading space. He goes by the name Goose. He trades primarily equities, and over the past 12 years, he's been able to train, trade, and mentor traders, including legendary traders, within the walls of Trillium and other firms. Recently, he posted a thread on the topic of drawdowns, trading slumps, and what traders can do to rectify that and find consistent profitability once again. It's my honor to introduce Goose. Hello, Goose. Thanks for being here and welcome to the show.
thank you so much for having me. I really appreciate it.
Goose, I like to kick things off by just simply asking, how did you first get interested in the stock market and trading?
I'm not old per se, but I think in the age of day traders, I'm probably a little bit on the older side. I'm in my mid 30s, and back when I was in high school, I an affinity for stocks, and I always thought they were super interesting. And I picked up a book like my senior year of high school, Stock Market for Dummies. Read that book, and yeah, I don't know. I kind of from there figured out when I went to college, I wanted to try to enter that world. So I went to Indiana University, and when I first got to college, I thought I wanted to do investment banking because I just knew they made a lot of money. And then I read a book called like Swinging Through the Wall Street Jungle or something like that, and it was somebody's account of becoming an investment banker, and I understood you had to work an insane amount of hours. And I read that book, and I just knew that I definitely did not want to do investment banking anymore. And then from there, I joined, it was the undergrad investment club or something like that. I joined that. There was a young man speaking there named Breitstein, and he was talking about, I don't even know if knew he wanted to do trading back then, but yeah, I learned the differences between, the capital markets and trading, the buy side versus the sell side and all that stuff. And then it really clicked for me. I read a book called Market Wizards. It was like the original one, I think. And after reading some of the accounts of the traders on that, I knew almost immediately, I was like, this sounds amazing. You can be entrepreneurial, kind of make your own hours to some degree. And it just gives you a lot of autonomy. And above all, what drew me to the most was just the aspect of a true meritocracy, where trading is all about how hard you work, and you can kind of, whatever you put in, you can get out. And it doesn't matter like who your dad is or anything. And to me, that was always like a really big draw.
Incredible. And two very inspiring people there, Lance Breitstein, the people's champ, and Jack Schwager, author of Market Wizards. I mean, what an incredible set of people to be inspired by. Was your plan to go into the world of, proprietary trading firms right after college? Or were you planning to trade your own capital? What did that kind of look like for you? Can you walk us through that senior, year in college where you're trying to figure out what comes next?
Sure. Yeah. I think especially when you're in college and you don't really know all the different career paths you can take, I did know I wanted to at least try to get into a job at a bank. And I actually landed an internship my junior year at British Petroleum at their Chicago trading floor. They're one of the biggest oil traders in the world. Well, I guess, that whole oils, distillates, and fuel oils. So I landed an internship there. And yeah, a lot of the traders there did really well. And I tried to leverage that internship into a job offer and ended up not getting a job offer, which at the time I was pretty upset about. But I had that internship junior year, and then I applied at so many places, applied at like a couple banks and stuff like that. I did do really well with my GPA and like my extracurriculars in college. So I did have opportunities to pursue different careers within finance. And I remember I had a couple like mentors, I'll call them, that I would talk to. And a lot of them actually were very dismissive and didn't want me to pursue proprietary trading. And mainly because very few, on a percentage basis make it long term. And if you decide to do trading and it doesn't work out, and say you put in like 1 to 3 years, you're essentially just behind the job curve of all your peers. And maybe a downside I'll call it, if you attempt to trade and it fails, you essentially have no like transferable skills for the most part. Like you'll pick up some things, but like it's not like, at least where I was started, it's not like I was like using Excel or like anything like that. So I decided when if that was, since I was in my, 21, I wanted to do it then, and I didn't want to have regrets and look back and say, what if? And then, yeah, I continued keeping in contact with Lance, who we weren't like buddies or anything. He's a couple years older than me, but I networked through him, and he started at a company called Trillium Trading. I think he was the first Indiana student to actually go there. So he was like my only connection there. Or maybe there was one other guy there. But I talked to Lance, and once I went to New York and interviewed there, I remember walking out of that trading floor and seeing all the traders just sitting at their screens, and they were very, you get to kind of make your decisions. And after just being there for like an hour, I knew that that was my calling, and that's something that I wanted to pursue full time. And luckily for me, I was able to secure a job offer, and pretty early, I think, maybe like 2 months after my senior year started. So once I had that job offer, I don't want to say I just completely coasted for the rest of the year, but yeah, I was locked up there, so that was definitely a good feeling, and that's kind of how I stumbled into at least working where I started.
Sounds like a great place to be if you want to be trading. And so, could you talk a little bit about what that experience was like? Training at Trillium.
I moved to New York, got into the trading floor. I think we had a class of like 18, maybe 20 traders. And as of now, I think there's maybe only like 3 or 4 still trading. Um, but yeah, you did 2 weeks of very basic, just like learning the software and stuff, and then you got matched up with a mentor, and you went right on the trading floor after those 2 weeks, and you were just starting live on a live account. The firm provided capital. I didn't have to put up any capital or anything, which I think is really important. And my trainer was incentivized to make sure I succeed. He got a percentage of what I made, and he also would have to pay a percentage of what I lost. So yeah, we starting there was awesome. And actually, this is just like a funny story, which I think leads into our next topic. My first day live trading on the desk, it was Fed decision, FOMC meeting, and it was like a 95% chance that we were gonna taper. It was during like the end of the quantitative easing, in 2013, and it was a surprise announcement, no taper. And I and I had no idea what I was doing. I was literally like live trading for like 30 minutes, and like it was these insane stock moves. I remember like everyone just went dead silent. Everyone starts freaking out. The energy just went from like a 0 to like 100. My trainer told me to type up a stock and just buy, and he's like, just buy this stock. I had no idea what I was doing, and I bought. There was like a double levered inverse silver ETF that just like there was a massive order flow, and I immediately made like $900, and I was like, oh my god. I remember writing in my journal like, I know that literally like I have no idea what I'm doing. I just got lucky. But yeah, it was insane. People, I remember one trader was walking around. He was walking around the office flexing and just yelling like, I'm maxed on gold. I got lucky, obviously. I made money in on like randomly, but I remember I was like, this is definitely like I'm so happy like this is where I am in life. It's just like a funny like first day to be on the desk experience.
If you're looking to take your trading to the next level, Investors Underground might be able to help. You'll have access to courses and mentors to learn from, some of the best technology available for scanning stocks and breaking news, and access to the chat rooms, where you'll find a vibrant community of focused traders who share their trade ideas in real time each day. Members also have access to the morning broadcasts, where the IU moderators share their trade ideas for the day ahead during the pre-market session. Members have access to the midday study sessions with Stan, the midweek study sessions with Sam, webinars, moderator watch lists, trade review videos, and all the other tools and resources that Investors Underground has to offer. Listeners of The Trader's Journey can access exclusive membership deals available at investorsunderground.com/journey. And now, back to our episode with Goose. That is a great embodiment of some of the, very communal sides of proprietary trading and the best of trading itself, right? Where you have some sort of volatility and something really exciting happen in the market and you're able to capitalize on it. So it sounds like absolutely one of those just like hallmark moments in a person's life that you'll just always remember.
Yeah, it was really special, honestly, and that's like you said. I just think being on the trading floor, especially when like you're a younger kid out of school, is like super helpful. And yeah, it felt like back. I played a bunch of hockey growing up, and it felt like I was almost like back in the locker room, like playing it. Like you're not really on a team, but you kind of are in a sense.
And that is one of the questions that I wanted to ask, which is like, what are some of the the positive sides, the pros, if you will, of being at a proprietary trading firm compared to maybe some of the drawbacks, if there are any, or maybe some of the cons of being in that type of environment? Because like you've seen a lot of people come and go.
That's a great question, and yeah, I've seen a lot of characters come and go. It's funny just the type of personalities that are attracted to attempting to trade. But yeah, so I think some of the cons are kind of alluded or like mentioned at the earlier question, where if you don't succeed, and that's common. Sometimes people just aren't really cut out for the grind. Your transferable skill set is pretty much non-existent, and you're going to be behind the ball compared to your friends. But if you do succeed, there's obviously massive, financial upsides. Uh, Everyone knows, you can pretty much take off whenever you want. You have a lot of flexibility, which is great. But I think in terms of like learning, to me, so prop firms, well, the traditional definition is you put up your own capital and then you can kind of work from there. But if you find the right company, like a Trillium or my current company, you generally don't have to put up money. And the firm will kind of spot you. You and your firm are incentivized to make money together, which is fantastic. And being on the trading floor though is just it's so to me it was instrumental to just learning. I can't imagine like in the COVID era trying to learn from your own house. I think it'd be a lot more difficult. Being on the trading floor, you just have access to all these different traders, in different styles of trading that might fit to your personality. Because there's no trading to me is more of an art than it is a science, where there's so many different types of strategies and stuff that might work for one person and they might not work for another. And that's mainly due to like personality and fit. And when you're on that trading floor, you just have that ability to talk to trader A, B, or C, and they might be trading the same ticker, but looking at it completely different. They're different lens. And you have that ability at a prop firm to kind of learn from the best, which is fantastic. I think cons wise, uh, short term, I think like you could view competition. To me, it's like a double-edged sword. When you're in the office, there's times that it will benefit you mentally, and then there's a lot of times though that it could be a big drag or just affect you more mentally. It's like you might have had your best day ever, but the guy next to you made like 5x what you made. So instead of feeling great about yourself, which is what you should be feeling, you feel awful. I think for me, I always went through ebbs and flows where there was times where I really loved and thrived the competition, and then there'd be times when I needed to focus more on myself, and it was harder to kind of right the ship or do things correctly when I was more worried about like what my neighbor was doing versus what I should be trading.
That's a great point. And one of the things that's also true is that like competition exists even online. There have been a lot of times where I'll talk to somebody and say, I was feeling really great, and then I saw so and so, did X amount online, posted their P&L, or a lot of guys are killing it in the market right now. I'm not doing so good. Actually, it's my worst month of the year or something like that. So, yeah, it's worth noting for people who are listening that yeah, this will exist. This is true in prop firms. This is true in other firms, corporations. It's also true even outside of prop firms as well. So something to for those people to consider.
Yeah, absolutely. I think trying to use that as fuel to motivate yourself is the best way you can kind of take advantage of like seeing numbers and stuff like that. And yeah, especially on Twitter, like Twitter is just like a funny feedback loop, because if you want to like keep your engagement higher, you almost like have to say things that are outlandish, or like, you have to keep just leading with like, oh, here's my numbers. And yes, I do think, and I still go through periods mentally where I have to uninstall Twitter for a while because maybe I underperform something and I know what I need to address. I don't really need to see like everyone that's just crushing it, especially like my algorithms it's just feeding me trading stuff, because that's what I like to read.
Going back to this idea of trading at the firm, When did you start to see profitability? Because, I've talked to people who had maybe 2 or 3 or 4 years before they found a break even point, let alone profitability. So, what did that look like for you, your equity curve and the trajectory there?
Everyone's learning curve is going to be different when you're trading. And unfortunately, a big degree, in my opinion, comes down to kind of like luck of the market you're in. Like there's some people I've heard of that started like right before the flash crash in 2008 or like, different during different periods. And then there's other, but usually what happens is you start and it's a little bit more slower. So you get less reps to like trade certain setups. And you need reps in order to, size up and try to push it and, try to get better. So yeah, you can see my first 5 months or so, I was negative, and then even I was marginally positive for 2 months. But yeah, so it took me to about June, which I started September. So yeah, like 8 or 9 months it took me to like actually have my first good month. In that first good month, I had just had one good trade, which I'll show after this. And then I started to get like a little bit more comfortable, and then in October, there was like this big scare with Ebola in the stock market. The VIX went up a bunch. The stock market was a little bit volatile, and it just created like a perfect environment for day trading, especially like the style that I was trading at that time. And I just had like my first awesome month in October. And then from there, the next 2 months I didn't do great, but from there I feel like I was kind of like established. Yeah. So I'll show you my first big trade I made. So not only, but a huge chunk of my year would only be like breaking news, and there wasn't as much like computer programs and bots like buying like buyout headlines right away. So a trade that I used to do, especially as a rookie, was if like stock A was getting bought out and spiked up aggressively, I would just go to its closest competitor and I would just buy that also. In this scenario, I didn't have Bloomberg or any news or anything. So in this example, Trulia, the ticker was TRLA. You can see it like right here. It spiked up, and then I immediately went to Zillow and I just bought a bunch of that. Um, what I didn't know, because I didn't have news, someone had to tell me the news, was Zillow was actually buying Trulia. And back in 2014, the market was a little bit different. Anytime a stock was buying another stock, it would also go up like 10%. Obviously, like most of the time that doesn't happen now, but back in that like year or two period, the acquirers could go up just as much or sometimes even more. Um, so yeah, I bought, and like I said, I just had like hotkeys. So I think I bought like 1,500 shares of Zillow or something. It went from 129, and then I immediately started like selling it. Uh, yeah, you can kind of see like my exits on this page. Yeah, so it ended up going like there, and I think I made like 10 or 12 grand or something, which was at that time like my best trade ever by far. And it's funny, I don't have the picture. I think it went to like 160 or something. So if I actually like held my position, it could have been like 50 or 80 grand or something. But you have to kind of learn. You have to learn how to make money. You can't just like start from zero and make 100 grand. You have to like make five a bunch of times and then 10. And I remember right after like I got out of the trade, I like looked at my trainer and I was like, oh, I sold too early. And he was like, I didn't even buy any of it. Like he was, and that was that time that I was like, wow, I was like, maybe I can do this. That was like my first like big trade. Yeah, it was the good old days.
That's incredible. And that's actually one of the questions that I wanted to ask, which was, what was the point that you started to have some, belief in yourself? Because as you showed, the first few months were red. And I'd imagine that can take a little bit of a toll on you mentally, especially for, a newer trader trying to start out and get their bearings and their foundation.
Day trading profitably long term, I think the hardest part of trading is the mental aspect. You have to be willing to just get up over and over and over after you get knocked down. I think for me, I'm an optimistic person. I do have a lot of self confidence, which I think is really important. And I wasn't profitable after month 3 or 4, but I was right there. I was right on the cusp. But yeah, that Zillow Trulia trade I made in June of 2014, because I started in September of 2013. That to me, I was like, okay, that proves that I can make, $10,000 plus in a trade. And contrary to popular belief, to like be a quote unquote successful trader, like I don't know, like if you make like 100 grand a year, like that's like a way above average standard of living. Just that, depending on where you live. Just on that alone. But that single big trade to me did it. And then I had that month in October where I made over 100,000. And like I said, there was like really good trading opportunities, but the fact that I was able to step in and put up a number like that, that was that confidence I needed. And I'm not sure if it's still that way, but at my first company, hitting your 100K was like your first big milestone. And once you hit that 100,000 mark, that's when you were considered like part of like the tribe. So when I was able to kind of hit that number in October, so almost a full year, a little bit over a year when I started trading, that's when I was like, okay, like I'm here to stay. Obviously, like it's not like it's just always up to the top right hand corner forever, but I think for me, once they sent out that email like congratulations on hitting your 100,000, I was like, all right, we're made some progress.
From your perspective, you're not just looking at the end result of the month. You're there day in and day out. So, what did you see and what did you experience that kept you optimistic enough to keep going?
I would say like my strength is not my like intelligence level. I think my strength it comes from my work ethic. And from day one, I walked in with a notebook and I would take super diligent notes. Like I have notes from people that they would not even remember they said. I caught up with an old trader buddy like a month or two ago, and I was reading him some of the stuff that he told me when I first started. He's like, "Wow, I can't believe I said that." So I knew that from trading books I read, like specifically Market Wizards, like if you read between the lines, you can get a lot of like information on how they kind of position themselves to succeed. And it was get a mentor, find a company that can give you capital without you having to put out capital, and then take as many notes as possible and be willing to try new things. And I was trying to just I did the first two. And the last thing was kind of on me to be putting in these reps of taking notes, reviewing the notes. I would eat, sleep, and breathe trading like every day. Uh, and yeah, so once, I was 3 or 4 months in, I already knew I was, that it's the old saying, like, be the first there and the last to leave. Like, I pretty much was doing that, and I don't want to say I was the last person to leave every day because uh, there was some people that just stayed, I feel like just to stay. But when I was there and I was literally giving it all I had all day. And like even especially my first year, I'd get to the office at like 6 Eastern and I would stay to like 5 or 6, like most days. On weekends I didn't even go out like my first like when I was especially living like well I lived in Hoboken, but living in New York, my first 6, 7 months, like on every Saturday and Sunday, I'd go to the office for like 3 or 4 hours, like at least. I was extremely dedicated. So my work ethic combined with, like I said, like it's when you're first day trading, like you shouldn't really be judging your success based on your P&L. Like I know I was negative, but I was doing the right reps, and I was getting size in good spots. And just because I wasn't seeing the P&L didn't mean I was off track. I was really sticking to the process. And through those things, I kind of knew that I was on the right path.
Yeah, thank you. That's incredible. I know people might be listening and asking, what type of work were you putting in? Was it reviewing trades, reviewing charts? Was it, doing detailed write-ups? Was it back testing? What type of work would you say, looking back, was the most helpful or that you would recommend for traders trying to break through into consistent profitability?
I have never honestly done any backtesting or anything. A big thing that I would do though is I would make like game plans, and like I kind of showed you with that Zillow Trillion chart. At that time in my trading career, there was like a lot of buyouts, like all the time. And if you were able to you could make game plans before, and then there'd be like chatter for certain sectors, and then like a good one was Charter was going to be buying like T-Mobile or like allegedly, and that headline must have happened like 15 times, and not all of them are good. But you can make a game plan. I would write down on a piece of paper. I would write down if T-Mobile spikes up, I'm just going to immediately buy Charter, and I cannot tell you how many times. Just like, and then I'd buy 3,000 shares. So then I like as soon as that happened, I didn't have to think. I could just act. What I would do is, at some point, I made flashcards of certain tickers, and I would flip them over. And the other side would just be the ticker and the amount of stock I was going to buy. That's like one thing I would do. I would do that at my house, not at the office. At the office, yeah, it was talking to more experienced traders if they were there, trying to like after each day, talking to traders that made money, even if you didn't really know them, going up to them and asking them like, hey, how'd you do? Like, well, what were you trading? And then taking notes and making sure to ask like good questions. A lot of times, especially when I was training people or meeting like new people, I feel like they were asking questions just for the sake of asking questions, making sure to ask like intelligent questions, so you can get more information. And I really didn't want to leave any stone unturned. And if nobody was at the office, yeah, I'd be reviewing charts, going over, all the trades I would make. And at the time, I'm sure they still have it. They had a software where you could kind of just go back and retrade things. I think it was called Rewind. And I would do that a lot also. Especially especially for big trades where people made a lot of money. I wanted to see what and feel what that was like. I would go on there and I would buy some stock and see what it felt like to be up like $20,000. Or I would go on the same exact trade and I would short it and practice covering or getting out super fast. I would do like reps like that, and anytime I was out of the office, I wasn't like watching movies or anything. I was really trying to put in the work to get as much, information and time and effort out of it as I could.
That's incredible. And I think that's great advice for people who are looking to make those types of changes and make that progress. So I appreciate you sharing that. And I'd like to jump forward a little bit to now, all these years later. What is your trading style like now? Where do you find edge in the markets? And what's probably maybe your bread and butter type of setup these days?
My bread and butter has definitely shifted throughout time. It's a really important distinction I want to make is I see some, obviously I'm on Twitter a lot. I see a lot of traders and they'll have like a name like, oh, I only short low floats or I only do this. I think that's not a good idea long term. And because the market constantly shifts and generally like there's going to be some patterns that work great in some markets and then there's going to be some patterns that work horrendously in other markets. So I think, as I started my career, my main focus was order flow and news, kind of like the Zillow and the Trulia. And at some point we switched somewhere else. And now I'm kind of, I do a lot of short-term trading. I've always done short-term trading. And by that, I mean, if I get into a position, if it's not working, I'll probably know within 5 or 10 seconds and I'll usually get out. And if it's working, I usually only hold between like 2 and 15 minutes. And then I also have been trying to incorporate swing trading a little bit more. So longer term, well, not longer term, but like days or weeks holding a position. So my trading style today is a lot similar to how it used to be, but my bread and butter has really kind of changed now. Yeah, and my bread and butter now is, I do well in earnings after hours. So, and it's my thought process generally is, and I'm not analyzing the numbers like ever. My thought process is I'll look at the options expected move. So like for example, like Netflix will report like mid late April, and it'll be like it's supposed to move 8%. So that moves. You can look at the puts and the calls and the premiums, add them together. It'll be like moving 8%. So once the catalyst comes out, the earnings, generally not always, the stock will go up or down 8%. That's like the rule of thumb. So using that information, I know that a fundamental change has occurred and the stock could move really in a up or down like in a big percentage. And using that information, I combine that with like my skill set of reading the box, which is essentially just looking at the level 2 quote book. You're looking at the bids and the asks, and you're watching these interaction between the buyers and the sellers, and you're able to garner information to make trades. And by that, it means there might be like a pattern on a technical level I'm seeing, and I'm like, okay, if we break above X price, I want to be buying. But before that, I might be looking at the box to kind of see if I can identify a buyer or a seller or levels within there in order for me to initiate a position or size up. If you've ever watched like earnings come out, almost always there's a computer program that'll like spray it up or down in the first 3 seconds. So that like used to be a trade you could kind of do because the computers weren't as good. Now I don't compete with that. Also, like the spreads are massive, so it's kind of like Netflix might spray up and you might just try to go with it, but there's like a 30 or 40 point spread, so it's very like risky. Um, so yeah, Netflix went up. This is last quarter, like 100 points more or less, which was the entire options move more, I think. But because I was reading the box, and sometimes on really big beats in bull markets, a stock will go double the options move. So essentially, I was reading the box and I was positioning long, And then once we broke out above the 970, which is the high, I added there, and then I was reading the box and just trading momentum. And then I was able to kind of just like take it out, like below like $1,000. Very like non-complicated trade, but my edge is I'm very very good at reading the box to identify like patterns in sellers and buyers. This is what I would call a reference trade. And let me just caveat and say reference trades don't always work. Most of the time they actually don't work. Reference trade is wherever the stock was trading, so say it's $680 before the catalyst's earnings, that's like your price. So I'm ignoring the first 5 seconds because no one really knows. So we went down, and as we get closer to that reference price of 680, I want to be thinking to get long. And essentially, the psychology is everyone that just sold or shorted, thinking this was bad earnings or a bad catalyst, has to reverse their stance when we get closer, and then that creates the momentum for the leg higher. And I've seen this time and time again. Like I said, what happens often, a lot of times, is we'll go to the reference and then just like immediately like go right back. This was earnings. I was positioning long, I got out, but then we start to build in my position, and then as we get to that level there, I bought, and then we kind of like went off to the races there. And that was again, I was reading the box, trading momentum after hour earnings. This was SMCI earnings, where the reference price was like $630. As a trader, my job is to trade things. I'm not like, so once in a while I'll get into the weeds, but I usually know like a little bit about a lot of stocks. I cannot tell you how many times I've seen my friends or myself look at earnings numbers come out and then think to myself, oh, these are really good. But like, I don't know what I'm talking about. I don't really know what SMCI or anybody does. It's like my level of knowledge within something is very like superficial. And I've learned over the years that the more I remove my own analysis of a headline or earnings or anything, the more clearly and less bias I have when a trade is happening. And like, to me, if I'm trying to analyze the numbers, I might have a bias. So in this example was this SMCI. I believe it was already down a bunch from its high of 1,000. And then the numbers came out and they looked like fantastic, like huge beyond rev, huge guidance. But then the box was just so heavy, like the sellers were coming out of the woodwork, but there was a lot of buyers that were like holding it up. Eventually I kind of like sniffed it out, so I tried to short it. I'm trading a reference. I believe the catalyst was here, right? We went all the way up, and then eventually I believe we're going to break this price and trade lower. So yeah, reading the box, I was able to kind of sniff it out, and then like short it and catch it. But if I remember when the numbers came out in this scenario and thinking like, there's no way this reference is because the numbers look so good. But ultimately at the end of the day, all that matters is kind of the volume and the setup. And I'd really try to get away from like analyzing like a lot of news. I think it negatively impacts myself. So yeah, those are just like some examples of my bread and butter. It's not complicated at all. And like I said, my edge is reading the box.
That's a great point because you're focused more on the price action than trying to analyze and become an analyst in that moment. Is that accurate?
Yes, 100%. It's something I tell myself every day is all that matters is the volume and the setup. And what that actually means is, like, I don't care if you thought the buyout was bad or you thought the numbers were bad or good. Like, all I should be doing, or maybe the news was old, all I should be doing is just going with the price action and the volume.
And since you're trading after hours for earnings, are you also standing by for the earnings call and tuning into that as well? Or are you just focused on the charts and the box?
Not always. A lot of times, though, I will go on the call, especially sometimes I get into trouble because, it'll say the options, it's supposed to move 10%. And then if it's trading at like 1%, I might think to myself, convince myself it's going to go up or down 10%, and then it ends up not. But a lot of times what I think the psychology is if the stock's trading like flat or like in that range, I want to go on the call because the real movers of the stock are like large institutions and like hedge funds, especially after hours. So, and what they don't operate in the same lens I do. They're actually waiting for like certain numbers to put in like their spreadsheets to decide if they should be buying and selling, and they need that clarification on the call. So yeah, there are a lot of, especially for some stocks, they do provide comments on call, like maybe it's guidance or, whatever it is, or like CapEx. So yeah, I know I want to be on the call, and then I have notes for different stocks about what roughly what time that will guide that specific metric. So yeah, a lot of times I will be on calls. It depends kind of what I have planned after hours. But generally I will be on the call unless the stock's already up or down like a ton. I think at that point, very rarely are they going to say something to like completely reverse the move. Yeah, not to say it can't happen. It just usually I know I don't. Like it's less important to be on a call like that.
I wanted to talk a little bit about, the evolution of your trading in the context of like a playbook, because, some of the setups that you might have been trading in year one, might not be what you trade today. And so, how did you begin to expand your playbook? What was that process like for you when you're adding new types of things that you might want to trade?
So yeah, the playbook, the best way to think about it is it's just like you're playing like a game of football, right? Like are we running shotgun or the I formation? Like there's all these types of plays within there, and it's the same thing for trading. I use a program called Evernote, and you can just see here these are all the categories of plays that I have, and within each of these, I might have like five or six like different types of plays. The way I've kind of like developed these plays over time is kind of just is first witnessing somebody else do this trade or a pattern. Especially when I was starting off trading, the way that the kind of learning curve is I would start with my mentor. He would trade stuff, he would make money, then he would explain to me his thought process. I would take the notes down. I'd be like, okay, and then the next time he would do a very similar setup, and I'd be like, oh, okay, like these kind of go together. I would categorize it. It'd be like, oh, he's trading, we'll call it if we're doing an IPO. So I'd make a folder, the IPO folder, and I would kind of document like what he was thinking in his thought process. And then the next time you see that pattern, you're able to draw from your past experiences and put it together, hopefully. And if it works, it works. And if not, you kind of can figure out why. And it's largely just a bunch of trial and error. But to me, like the most important part of day trading is pattern recognition. It's recognizing those patterns, aggregating them, creating a system to trade those patterns. Because at some point, those patterns are going to cease to exist. Almost always. There are a couple of trades and like setups that I've seen like throughout my entire career, but almost all these other setups disappear after like a year or less. So it's categorizing those, putting them in there, and then you just label it. Like if you saw my list, I have one type of trade called a Kiffer roll to low. Kiffer was a guy that I mentored back in the day. He no longer trades. I don't even know if you realize that he created like this pattern that now when I see it, I think of them and I kind of like know how to trade because I have a lot of, iterations and examples of it. I don't, like I said, I don't do any back testing or anything, but I have all these like past examples. So in a way, I guess I do back tests. Maybe it's just more like mental. That's what I'm drawing upon to kind of like make my decisions in real time.
Are you adding to the playbook in anticipation of potentially changing markets? Or is this coming from, just different setups that you may or may not know that you're just in a constant state of learning? Is that more where it's coming from? Or is it a combination of you just curious to learn new setups and you might observe the market changing? What's kind of the background and subconscious that you carry in to expand your playbook?
Yeah, I think that's a fantastic question. And the way that you said it is, I think having the mindset of to be in a constant state of learning is like that's like if I could frame something on the back of my wall, like it would be that. Like as a day trader, especially as you get like older and more experience, you have to be willing to learn and learn new setups and be willing to accept that some of your old setups are no longer work. I cannot tell you how many times I've seen, including myself, have tried to, you're trying to hammer like a square peg into a round hole. And, it takes a mentor or somebody else, I cannot, Lance has taught me like many things over the years. And I vividly remember him, like I said, there used to be a setup where if you bought the acquirer buying, the acquirer of a company making an acquisition, it would go higher. And I remember like for the longest time, I kept doing it. And then I remember I was going through a tough time and Lance was like, well, you keep losing all this money in this certain setup. Like, haven't you realized like it doesn't work anymore? And then it like a light bulb went off and I was like, oh my God, like he's so right. And I went through the data, compiled all of it. And now, yes, I am in my subconscious is always thinking like maybe this will be the time that this pattern doesn't work anymore. And it wouldn't even be one or two or maybe even three times that you lose money in a certain setups. It might be like a period of weeks, or maybe the S&P is below its 200-day like it is now, or maybe the Qs, or maybe the S&P bounced. But that might be like a trigger for this pattern like not really working. In that reference type of setup I recommend, or I was referencing earlier, um, at the start of my career, maybe the first like 7 years, I could trade references in like all these different stocks the next day, not even when the market was, not even after hours. It'd be like, if they reported Monday, it'd be Tuesday. I could trade them like the first hour of the day. And then the last 3 years, I cannot tell you how many, like, those don't work anymore. And even though I might see it and I'll think to myself, like, oh my God, like younger me would love to short this, I'll have to kind of like have to step back and be like, until I've seen like three or five that have worked, then it's proof maybe that these are back. And then I can start risking because I don't want to just be losing money into a pattern that I, to me, still has to prove itself.
That's a great point, because it's really hard to break some of these old habits, especially if you've taken time and muscle memory to program them. And yet that's kind of the excitement of the market all at the same time, is that there is this constant state of evolution and change in the market itself and the cycles and what works and doesn't work.
Yes, that's exactly right. I patterns like that same trade doesn't. I think the old adage you're saying is you never see the same trade twice, but you're gonna see the same patterns like over and over again. But they're just gonna like come in waves, And there's another like funny example is I think it was like 2015 maybe when Jim Cramer would go on at the beginning of the day. He would call it a stock on I think it was called stop trading, and the stock would go insane. Like I remember the first time he did it, the stock went up like 10%. And then you're like, what? Like, that was weird. And then the next time it went up 10%. And then the next time it went up 20%. And then this happened for like 2 or 3 weeks. And then eventually, like, the market cooled off and they like never worked again. But it was like, if you recognize that early and went, like, I have so many, even like, I'm sure a lot of guys like Josh Brown would used to call it stocks on halftime. You could just, if you were bought in the first like 3 seconds, it generally would go up and you'd make money. Those don't like really work anymore. It just like that's just as the trades work better, and then more and more people learn about them, if they become overcrowded, and then the edge gets taken away, it gets eroded, and that happens like through a lot of things. Like even buying the right side of the V. Like I see it all the time. If everyone is waiting for the right side of the V, that liquidity that was used to be available shrinks each time, right? And you're essentially fighting for a smaller piece of the pie, and then eventually, like a bigger fish recognizes everyone is doing that. So they'll stop the selling. They'll kind of create like a fake V, and then they'll get tons of liquidity and just sell directly into it, and then it'll go straight down. There's, even patterns like, and I'm not saying that pattern doesn't exist. I'm just saying like you have to be a little bit more careful as more and more people become aware of certain patterns.
Absolutely. And since, you've brought up Lance, mutual pal of ours, and you got to work with him inside of a trading environment, is there one particular lesson or piece of mentorship that really stands out to you that made a huge difference in your trading? I know you've mentioned a couple already, but is there one in particular that you think, really changed your trading?
I search Lance on my Evernote and he comes up 220 times or something like that. I think there was like hundreds of lessons and little like nuances that I learned from Lance. But to me, the number one thing that he always used to lead by example, and by that I mean his work ethic. The amount of like time and effort he would put in was so far and above what every single person else was doing. It was honestly like amazing. So for me, the number one lesson was just the amount of work ethic in time and effort. I've said time and effort three times. That's how much I want to emphasize how far and above he went. And he did it by example. He would be a lot of days he would be the first one in the office and he would definitely be the last one to leave. On weekends he would come in for like 5 or 6 hours. He truly dedicated and probably still dedicates his life, maybe not so much anymore, to the trading game. And that's why he was consistently the number one trader at some point, and just no one could even come close. And that was because of all the time and effort he'd put in. And he was always open-minded too. Like, just, an example was he used to not be very good at headlines, and then he decided he wanted to get good at them. And then one day he was a beast at them. But it took time. He used to put a GoPro camera like right behind his desk, and he would so it would capture like everything happening. So he was able to go back and like analyze. He, I remember one time if the office was too loud, he bought these like massive lumberjack, like it was headphones lumberjacks wear, and he bought a pair of those. He would wear them. And us, the other traders kind of giggle, like, what is this guy doing? But like, looking back, like it made complete sense. He was that dedicated to the craft. He was willing to do whatever it takes. And he, like I said, he did it by example. So to me, that was my biggest takeaway always.
Yeah, thank you. I think that's really, really incredible and not surprising. Having spoken to Lance a few times, he really does stress how much time, energy, attention, and passion went into his trading, especially during those years when he was at the prop firms and he was, the legend, doing so well and being at the top. So the other topic I wanted to discuss, if that's okay, Goose, is about, the kind of the antithesis of that and not making money and not doing well. So like the drawdowns and the times that you're doubting yourself. I know you recently had a post and a thread actually on this topic. So I kind of wanted to touch on that a little bit. What was the inspiration to writing that? And, what's your overall lesson about losing money, having these drawdowns, and being able to come back?
Sure, yeah. So that thread I created is very personal to me for multiple reasons. One, as a day trader, your job, like your income, is not guaranteed at all. There's going to be some months you do great, and there's going to be months that you don't make any money, and you might start wondering to yourself, like, how am I going to pay the bills? How am I going to do this? And it can take a huge toll just mentally on you. I think the first inspiration came for me. I think it was 2016. Yeah, it was 2016. I think was my first like really bad year in the markets. And it was a tougher year trading wise, but honestly, it came down to my work ethic level and my dedication was just like not there. I was coming in late. I was leaving early. My heart just wasn't really in it, and my results started to suffer quickly. And because of that, I didn't accept that it was because of me. I kept blaming the market. I blamed everybody else except for myself. And I got to a really dark place where I started using all of my savings and stuff that I accumulated through the years. I didn't tell like my girlfriend at the time that I was doing poorly, and we were still like, had this standard of living up here, and I should have been like told her we need to cut expenses, and I just kept pulling from my savings, and I got to a really close place where I considered leaving trading. Eventually, talking to like my mentor and some other guys, I started seeing a therapist. I was able to kind of, I started like, I wasn't depressed, but I was definitely like pre-depressed. um, and I went through a lot of like scary like mental health, like just issues and things like anxiety and stuff that I'd never even really dealt with before in my life. And it, through like, Lance's like mentorship and like some of my buddies, I kind of like found my path, and it took me over a year. Literally, like I eat through like almost all my entire savings at the time, which didn't feel good. And after going through that experience and really like going down to the core of like my work ethic, and then from there, once I started to put in the work and like I'll ride myself, like man, it was so just like mentally exhausting. But looking back, obviously, it was not a very good period of my life. But looking back, I'm so proud of myself for being able to kind of get over that speed bump. And I remember talking to one of my buddies, like when I was like my lowest of my low, and he was telling me that when you look back at your career, this is going to be a minor speed bump. And I remember thinking like, I believe you. And he was dead right. So that was kind of like my inspiration for why I wanted to do that, because I get asked a lot of times, as traders go through, tumultuous periods, like how they can kind of improve and stuff. And yeah, that was kind of like my thought process and stuff. But having that positive attitude in your support system, I think is like the backbone of like any turnaround story.
On that note, what are some of the things that you think traders who are having a difficult time, a drawdown, doubting themselves and their confidence in trading might be low? What are maybe some of the actionable steps that you would give to them to try to get through it and to navigate out of it?
The first step, I think, is kind of addressing your attitude. And like it's like a very like, you know, very simple answer, but I interact with traders all the time. The first thing I think I notice if a trader is not doing well is the amount of complaining that I get. Right? And like I said, I'm not an innocent party here, but even just complaining, that putting that out in the universe is just not going to really help yourself. Like it's not. And obviously sometimes it's good to talk to other traders about, going through in similar positions as you and complaining and kind of like feel a little bit better. But I think that's a bad habit to get into. And then having that positive attitude by eliminating negativity is probably like the number one step you can take, and you can do that immediately. The second thing from there is going back to the data. And like I said in my thread, you're either over trading or you're not making money in setups that you should be. Generally, it's the first. If someone's like in a hole or doing poorly, you need to go through your data. You need to, compile all of your trades you've made over the last week, or it's usually longer than that, over the last month or the last quarter. And then you take all of your trades, you categorize each trade within your playbook. Like, am I trading earning? Am I losing? Where am I losing the most money and why? And sometimes you might be able to like immediately, especially when it's quantified, when you see that number, you're like, oh my God, I lost $45,000 trading low floats, right? Like you're like, okay, maybe I should just stop trading low floats. So once you get that attitude, then you move on to the data and you kind of figure out like where you're losing money. And then once you stop losing money, that's like the first like step. You size down and you stop losing money. And then you're like, okay, I don't see just big red numbers every day. Where do I go from here? And then you try to go back to the basics of once you went to that data, I'm sure there was hopefully some trades you were making money in. That's where you can maybe start to like size up and stuff. Or maybe you need to scout more, or you holding too long. Like going back to the data is where it's all about. And then I would recommend like it's different for everyone, but taking scalps or just exiting quickly just to start to see some green numbers on your screen. You build some mental confidence, and then you can kind of like go from there. And back to just like the attitude thing. If you're like at least for me, if I'm trading poorly and I know what I'm doing wrong, it's probably fine for me to go on Twitter. But like if you're trying to size down, I think Twitter is probably not the best place for you, especially seeing someone make like huge amounts of money and then you think to yourself like, oh, next trade I'm going to do that, but you're probably not mentally ready yet. And like it's so important to identify what's going wrong first within the data, with combined with that positive attitude though.
Feeling about something is one thing, but being able to channel that into action to how to get out of it, like you said, looking through the data and finding where that green is coming from and trying to really maximize that and minimize a lot of the losses, I think makes a lot of sense. And it sounds so easy, but when you're actually emotionally invested in your trading, that's when it gets really difficult to do something like that.
Yeah, absolutely. And also, I think sometimes it's good to just take a day off or 2 days off. Like, it's funny, like that may sound dumb or trivial, but like you go outside, you go like play some golf, or you just really don't think about or look at the markets. You come back the next day with like a little bit more of a fresh perspective.
Goose, I'd love to end this episode by going through a lightning round set of questions. Quick questions, pretty quick answers. Is that okay?
Yeah, let's do it.
The first question that I have is, what would you consider to be your greatest strength as a trader?
Number one, I would say is my positive. I try to keep a positive attitude, but leading into that, I'm extremely introspective. My definition of that is I'm very aware of my emotions and my kind of like my mental level. So some days I might recognize that I'm tilting super fast and I'm able to kind of like cut it off, or I might recognize that I'm being closed-minded, stuff like that, and it helps me adjust a lot faster. That's definitely like probably, but that's also combined with like my attitude and I trying to see things as half glass is half full. And then the second one I would say is I'm almost always willing to admit when I'm wrong, and I try to stay open-minded to new ideas and trends. I don't always, generally I will be a little bit resistant to like a new like trend or idea at first, and then after I think about it, I'm like, all right, let's give it a shot, and then I'm willing to try new things. I'd say that's my top two strengths.
What would you consider to be the best piece of trading advice you ever received or heard?
Right before I started to make money at trading, so it's probably like around that October period, I was talking to a trader maybe like 2 years older than me, and he gave me this like amazing speech. In the TLDR is at some point you just need to start using more size and pushing your comfort level. And if you don't do that, Like, I don't understand, like, why are you even here? Like, what's your purpose to like trying to like become the best, become your best version of yourself? So the best speech or like advice I ever got is, if you're comfortable with the setup and you can consistently make money, you need to be pushing your comfort level. And I like to think of your comfort level as a sliding scale where it's 0 is you don't care, 10 you're like shitting your pants, and you need to find like what level that's there that you can feel like you're pushing your comfort level and risk, but also not to a place where you're gonna just puke up your position if it goes like erroneously, or goes wrong, I should say. And if you're especially like you might know if you heard what I just said, there's some traders that are right there. They're on the cusp of being like really good. You need to just jump. Like if you're on the edge of a dock, you need to just jump in the lake. You can't just stick your toe in. You gotta just jump in. And I think when I heard that piece of advice, it really clicked with me. And that's not going to click for everyone, but there's some traders that are on the precipice of being great, and you need to just push yourself and just go for it. And especially if you are familiar and comfortable with the pattern. And I think like that, in that level of pushing your comfort, once you're like have confidence and stuff, that is so important, especially as you want to grow as a trainer and make more money.
Are there any misperceptions that you believe exist about trading?
Yeah, I think the first one is trading is just like gambling and like you get lucky. I think I'm a big believer of you make your own luck. So like once in a while I might get lucky in a trade, but because I'm putting in the work and I'm sitting here and I'm like trying my best, that enabled me to make money. So and also like, I'll talk to like my parents or someone and they'll be like, "Oh, trading is just gambling." We do take calculated bets as traders, but if you're doing it correctly, you're not gambling. You have some type of edge or some type of patterns that you're that's giving you that advantage. The second misconception would be like that's only computers, like trading news and stuff like that. Especially you'll hear on like CNBC and like, oh, the algos thought the headline was bullish, and it's like, no, that was me, man. Uh, that'd be the other misconception.
If you could go back to the start of your trading journey and give yourself a piece of advice, what do you think it would be? And do you think you would listen to it?
First piece of advice would be don't trade. I'm just kidding. And this is not really like for trading. My biggest piece of advice would be just because you know how to successfully trade, it doesn't mean you know how to successfully long-term invest. And this isn't really like about trading. I've become victim or have been a victim, and I've seen it in a lot of my friends and still see it. Is you'll make a bunch of money trading, and then you'll think that you're like have an advantage like investing, and that just doesn't happen. Like almost some people can do it, but generally you should just put your money like an S&P or like an index or hire a financial advisor. That'd be my number one advice. That would have saved me so much money and hardship long term.
And for those who are doing extremely well trading this year, what advice would you give to them?
I love this question. For me, it's keep trying to push your size instead of you're familiar with, like I said a little bit earlier, especially when you have confidence and you're seeing the market clearly. It's super important because patterns aren't going to last forever. And it's so important that what's the expression, something like make hay when the sun's shining. That's the same exact principle. When things are really volatile or like things are going well and there's activity, that's when you need to be really, really pushing it because more often than not, it's slow. There's not a lot of stuff to trade, and you're going to be wishing you were back in that time, like giving it your all.
And for those who are struggling or not doing so well this year, what advice generally would you give to them?
You can never give up. It's okay to lose money. It's not okay to lose money and don't learn anything. There's almost always a really valuable lesson when you lose money. And that's what it's called. Like you heard the expression paying tuition when you're trading. Paying tuition means you're essentially just losing money in some dumb trade, or maybe it was a good setup and you did something dumb, or maybe you used too much size. Right? There's so many things that you can learn, and you never give up, but also don't be afraid to lose money. You literally need to lose money because that's how human brains work. Is you're going to remember something 50 times better if you lost money in that situation.
Are there any specific technical indicators that you prefer to have on your chart, either when you're analyzing it or deciding maybe an entry or an exit position?
Yeah. So I really don't do anything too fancy. I have like Bollinger Bands. I have a lot of charts. I use like Bollinger Bands on the main ones, the 200-day moving average for long-term chart. And I use like a couple of simple moving averages, but I, what technical analysis and these indicators I think is so cool is every single trader uses something different, and you kind of just have to experiment with what kind of like vibes with your personality. Like I said, I don't do anything very fancy at all.
Are there any areas of your trading that you're currently working to improve on?
Yeah, so for me, I've been really working on swing trading things, long. Uh, I will go short too, but I'd prefer to be long, especially like if we're in a bull market type environment. I've really been working on trying to get better at those. And then I would say slash, I always try to get better at low flow trading, but that's definitely my biggest weakness as a trader. I, for some reason, struggle so much trading low floats. I can't explain it. I have hundreds of notes and hours I've spent. So that's like my number one swing trading because I actually like seem like I'm good at it. And low floats would be like a below that.
Last question. For those listening who would like to learn more about you or the way that you trade, how can they do so?
I don't tweet like too often. You can follow me on Twitter, but if not, yeah, I think Lance's explanations a lot of times will be a lot more in depth than what I can provide. But we're cut off the same cloth in some aspects there.
Goose, thank you so much for doing this, taking the time to speak with me today for this episode. I really appreciate it. I know there's a lot here for the audience to listen to that can be extremely beneficial. So thank you so much. I really appreciate it.
Thank you, Anthony. I really appreciate you reaching out, and I'm glad we could get this done.
We hope you enjoyed this episode of The Trader's Journey. We have additional episodes we believe you might also like, so don't forget to subscribe. You'll be notified of upcoming releases the moment they're available. Thanks for tuning in.